Hello everyone and welcome back to another video. All right, let's talk about what's actually moving the markets today and why crypto is under pressure. This is not about a failure in crypto itself. What we're seeing today is macro-driven risk-off behavior. According to Reuters, global markets remain cautious as investors react to ongoing uncertainty around inflation, central bank policy, and economic growth. Even as some officials suggest inflation may stabilize, markets are still uneasy about what comes next. That uncertainty matters because when investors get cautious, they pull money away from risk assets. Now, here's a key development many people are missing. As reported by the Business Insider, China has reportedly instructed major state-backed banks to scale back their holdings of U.S. Treasury debt. When large buyers reduce demand for treasuries, yields rise, and rising yields tighten financial conditions globally. Higher treasury yields make safer assets more attractive, which puts pressure on stocks, tech, and crypto at the same time. That's one of the reasons we're seeing broad market weakness today. Now, let's talk crypto. Barron's reports that Bitcoin, Ethereum, and other major cryptocurrencies are moving lower as crypto continues to trade in correlation with traditional risk assets. This isn't panic. It's capital rotating into safety during a macro risk-off environment. At the same time, leverage is being reduced across markets. Futures positioning is unwinding, liquidity is tightening, and institutions are prioritizing capital preservation over short-term upside. Here's the key takeaway. Today's crypto move is being driven by macro forces, rising yields, global uncertainty, and liquidity shift, not a breakdown in crypto fundamentals. In fact, CoinDesk notes that long-term Bitcoin holders have started stepping in during this pullback, suggesting experienced investors are viewing this as a positioning phase rather than a market failure. So if you're watching prices today and wondering what changed, the answer is macro conditions, not the technology. Markets move in cycles. Volatility is part of the process. And if you want to actually understand how to read market conditions like this, instead of reacting emotionally to price, that's exactly what my platform focuses on. I don't give signals or guarantees. I focus on education, market structure, and risk management so people can make informed decisions for themselves. If you want access to that kind of education and community that breaks down moves like this in real time, go ahead and message me.